Good morning, everyone. Today is Friday, August the 31st. This is Anne-Marie. We are looking at a private blog here. We're looking at support tests in progress, seeing what the chart's doing prior to a long three-day holiday. And this is the futures in 5. So let's take a look at our formations here. Yesterday we talked about 29.14 being a resistance zone. You can see that lower high. We have a high, low, lower high, lower low coming right into this line. This is a very big deal right here. Right inside of this zone is a thin retracement event that comes all the way to 28.84. My thought is the following. If we lose this level, we will naturally try to rise above it on the first pass down, but if we have another lower high event, it's going to be a shorting opportunity that's going to take us into 28.84. That is my thought about that right there. Could we collapse in a bigger fade? Yes, but summer Fridays usually bullish. This particular holiday has been extremely volatile on Fridays. We see big ups, we see big downs. Hard to say. Just follow the space. A lot of us are very afraid of being wrong. You just simply have to manage your risk. If you're only a little bit wrong, you're in good shape and you can move on to the next space. This is not a place for perfection, but we really can work at minimizing that risk. Trouble lifting off this area, we also have technical divergence, and you want to watch for that continuing because that will fade. This big giant move here that we had off of 28.73 is a very likely retrace pattern if we cannot hold these supports. So if we're thinking about negative traction, it could come all the way down here. But first, it's got to get through this space, and because we're naturally bullish, we're going to expect a bounce at each one of those stair steps before a fade. Taking a look at the NQ, it's also very sideways. We had the price resistance near 76.91. We did very well with that upward target. We can see it fading. Now we're looking at 76.64 that we need to get up and over. We're sitting between 76.33 and 76.64. Those are going to be the levels that we will naturally watch in terms of a bounce pattern. Pullback here, so far, it's bouncing. The problem is if we cannot get up over 76.64, it means we have to take profit. This is a non-trending formation. Non-trending formations are primary motions in the market. So we take support and we get out at resistance, or we take resistance and we get out at support. That's going to define the range. Our job is not to get all of the move. Our job is to get a part of the move and get ourselves out of the way, away from that risk space. Higher support really on the week looks like 76.08. Again, this area right here with this big candlestick gives us a likely rotation event because of the thin volume. Oh my, I don't have the YM sitting there. We normally have the YM. I'll be talking about that shortly. Let's take a look at oil. Oil's done a very nice job of bouncing off of its primary support zones. This target, again, quite nice. We didn't come quite into it, missed it by about 4 pennies, but still there, up holding the space. Look at all the buyers coming in today. More Aramco talks, trying to pull that IPO out of the space, but not really sure that's going to happen at all. Um, so we'll watch what's going on. This is WTI, of course, U.S. spaces. We've got rig counts today at 130. That's really more a measure of efficiency today than it is really output, because rigs can drop and output still holds steady because of an efficiency rating that continues to get better and better. Right now, we're looking at bullish to neutral environments, and that means these wicks are going to occur, so you want to wait for the pullbacks to go long rather than taking the long at the buyout area. This is a very big resistance zone. If we break through it and hold, this is what we need to do, get up above this 70.12 and hang on. That's going to give us a very nice price action that could take us to 71. Let's take a look at gold. We are looking at gold in the space coming into a support zone. The last things that we looked at here, we talked about gold coming into 1202 to 1294, something like that. It did come into that 1203 area maybe yesterday, a little bit lower than that, and now it is bouncing, but this is a very negative pattern, really. You can see all kinds of negative drift. A lot of folks are thinking about going long. You can see that positioning there. They're trying to hold these higher lows. The problem is these gaps, really, you want to get as close to them as possible if you're trying to pick a bounce, or as close to them as possible if you're trying to take a short. You see how that shorting event holds right there in this gap, pulls right down into the space. We are trying to build higher. We just want to watch what's happening there in the future. Now we get to take a look at the YM, this resistance zone. This one really has been the most sensitive to motion, right? We've lost our frontline congestion area. That's where the ES and the NQ are sitting right now in their frontline congestion. YM could be telegraphing a further drift, or it could just be saying, hey, listen, I'm weaker than the rest of you guys, and traders are just moving someplace else to take the position. This prior resistance, it's going to turn into support. This is also a low volume event that I've been talking about for a while, and so we could see this pullback right down. That's been our major target for the week if we lost these primary levels. So we'll be watching that, expecting a first pass bounce, but that came right here from an intraday perspective. So it's very likely that we fade right into this region, potentially a little bit lower, and then try to bounce. If not, we're going to fall deeper into the cracks. This area, primary weekly support, 25,610, that's all the way down here. And really, we've got a lot to watch. How this weekend is going to be very, very important. All right, that's it for the futures in 5. Have a good long weekend. I'll see you all on Tuesday.